All right, traders, I am back again with another video, but my confidence is shaking bad. I had a person tell me, looking at my last trade I posted, I guess it was this Swiss franc yen, and they told me my trade lost, and they basically told me, you suck, okay? So basically, my confidence is shaking. But anyway, no, I'm just messing around, guys. You got to have thick skin doing this because everybody's not going to agree with you. And also, you got to have thick skin when you're a trader because you're going to lose a bunch of trades and then you lose your confidence and then it's all downhill from there. So you can't let those kinds of things bother you. So I'm going to get started here and tell you what I'm looking at. So we're looking at Ichimoku, right? We're looking at the US dollar, JPY, on the daily time frame here. So when I look at this thing on the daily time frame and I'm looking at Ichimoku, everything's kind of sideways and flat here. You see this big thick cloud here, that's a lot of volatility, but then you see the cloud change over. So you had a crossover pretty much while the market was pretty sideways, if you ask me. So you really can't tell what the market is doing unless you start drawing some lines on your chart and look at the big picture of the market. All right, so what I'm seeing here basically is if we break outside of the cloud, I still don't feel confident with this trade right yet because what I'm looking at what the market was doing prior. So with Ichimoku on here, you're not going to get a real good feel because you really can't see. Ichimoku suggesting a possible move to the upside, but you got mixed signals. You got a bearish crossover, then you got another crossover here, then another crossover trying to develop, and then you got the cloud crossover, which is now bearish, suggesting that there's some strong resistance right here. All right, so just knowing that there's some strong resistance at this level, let's mark that just to get started for, we're going to put a line there. All right, so we need to see that. So I'm going to mark that line and then I'm going to add another line. All right, so we're going to mark this line right here, right there, right there. I like to go to my left and see how that line looks. All right. Yeah, I guess it's not going to let me go to my left. But anyway, yeah, that line looks decent. We could probably move it a little bit. Yeah, let's move it. We're going to move this line right to there because now we're hitting here and then we're hitting here with support. So here we were resistance. You could see where the market just banged right off of there. Then it was support here. And then it was exactly resistance there, broke through a little bit. Then it was resistance there. And now it still appears to be resistance to me. All right. So I'm going to put another line on here. Another horizontal line. And I'm going to the bottom here. And I'm going to go to my left to see if I like that line. When I go to my left, let's see what it hit. There's a good hit there. You could see the bounces here. So it was resistance here, support. Always going to my left to see how that line looks. And that's good enough. So we know this is a good level and this is a good level. So with Ichimoku on here, it's suggesting basically indecision here because you got mixed signals, right? When there's a market that's indecisive, most of the time that's a ranging market or a market that's not really consolidating because consolidating is not really an indecisive market. But here the market moved up to a resistance level. And then you could see how the cloud is flat up here. That's going to be a strong resistance level, hard for the market to get through. So if you can't really see what the market's doing, let me move Ichimoku off the chart for you for a second here. Now you can really see what's happening with the market. This line, I'm going to leave it there, but you could have a line up here too also. So support and resistance is more like an area, not an exact line. So I'm going to put another line on here because I want to make it like a zone. So when I look at this line, I know it's like a zone. And it's a small zone. All right, so when you're looking at that on the daily time frame, you get a good picture here because now you could see some things. So let's mark some of these things that we do see. Gonna mark these lines, these levels. So first we got a level here. We got here and here, right? So we'll mark it so we could see exactly. Hit there, and a hit there. That's going to be strong support there, right? So let's make some more lines on our chart, some more arrows on our chart, just having fun here, right? Got this level, got that one, and now we're here again. So let's line them up good. We got an extra one, we don't need it. So we got a hit there, hit here, a hit here, and another hit here. So we see this line, these levels are pretty strong levels, all right? So a lot of traders are going to tell you the more that level's hit, the weaker that level gets, but it still confirms that that level's strong, because the more it can't violate, then to me that's showing you how strong that level really is. All right, and when you go back in history and look at that line and you see where price wasn't able to get through it, then you start really saying how strong that level is. So especially down here, you can see how we bounced here. All right, so now I'm looking at a couple things here. The daily chart is going to be super strong for telling you some really good indications of what's going on with the market. So a lot of times you'll see a level that's being rejected, okay? So this was a rejection here, and then the market still went higher, all right? But that was a good rejection. Then you had a rejection here, and then the market went lower. You had a rejection here, the market went lower. You had a rejection here. What should we think the market's going to do? Every time you see the market come to this level, why would you change your mind and say the market's going to break through there? Let the market prove it to you, all right? So when we were down here, we didn't have a really rejection. I'm not going to call that a rejection. This was a good rejection here, and the market went higher. We had some things here. We could have boxed this in and then traded this to the upside. We also, this would have been a little harder. We could go down to the 4-hour time frame to catch this level. So the market's in a sideways market here. It's a ranging market. So we want to trade this much like a ranging market. So every time we hit this level, we should be looking to trade to the downside. So what I say all the time, until the market tells me otherwise, I'm going to do what it's been doing. I'm going to keep doing what it's doing. If it showed me here it was resistance, and it showed me here it was support, resistance, now I'm going to think it's resistance again, and I'm going to look for a signal to trade to the downside. When it gets here again, I'm going to still think it's resistance and trade it to the downside. It's here again, I'm going to think it's resistance, and I'm going to trade it to the downside. When it was here, we didn't know it was in a range. We didn't know this level probably, but yes, you could have looked back to your left. And if you already had that level there, then you would have saw that this level was a strong level. So when it got there, you would have wanted to trade it as support. But when the market was there, we want to trade it here again, right back at this 111,632 level. We want to trade it to the upside because that's what it did back here. So when we look at it here, we want to trade it to the upside because that's what it's done back here. Why would I go against what the market has been showing me or doing for me until it shows me that it's not going to do it anymore? So in that case, I would take, maybe we get 3 trades up here, because we probably wouldn't catch that one. I mean, we could, but it all depends if we had our levels and all, but I'll give it the benefit of the doubt. So if you would have traded to the downside here, you would have been a winner. If you would have traded to the downside here, a winner. Trade to the downside here, a winner. But if you would have traded to the upside because you think the market's going a direction, because you see 3 or 2 good strong bull candles, so you think the market's going to the upside, so you take the trade, all right, well, you're going to be a loser. So same thing here. Why would you take the trade? The market's been showing you what it's going to do. So continue to believe it's going to do that until it shows you opposite. And that way you probably win more trades than you would lose. All right. So let's go to the 240 time frame. Show you that real quick, which is the 4-hour here. So yesterday when the market was right here, I was telling people to watch out because I think this is going to drop to the downside because it's done it so many other times. And you could see we had some breakthroughs here and everybody got excited and had a breakthrough here, and breakout traders got excited and then they got taken out. At these levels, this is where you get most of your traps. You got mostly big bull traps here and a lot of bear traps on the bear traps on the downside, because all these bulls are thinking this is going to the upside and they get trapped and the market drops. Now this isn't a classic I like to see it on the daily time frame more if I'm looking for a bull trap, basically, because you could see a lot of times on a bull trap on the daily time frame, you won't have that rejection like you saw earlier. Like we go back here, you won't have this rejection, right? You'll have a nice candle that goes through a little bit, and then you'll have your next candle, a big candle that goes right back to the downside, and that will be a big bull trap. All right, now back to the 240, because I'm going to show you guys one more thing, and then I'm going to let you get out of here. I'm going to get out your way. Now this could go to the upside because there's a lot of things that I like to trade. I like to trade Ichimoku, but I love to trade fractals, and I love to trade support and resistance. All right, now I think I love fractals more than anything else, okay, and pretty much support and resistance. But you see me trading Ichimoku a lot, so let's put Ichimoku on the chart and see what's happening. But before I do that, let me show you. The market's moving to the upside. This could be a 1 2 3 pattern. This would be a 3 right here, and then the market continues to the upside. In order to know that it's going to go to the upside, if we get a close above this level, then we pretty much know. If you close above this level here, this support and resistance, this resistance level right here, I wouldn't think that just because you close above this resistance level, that wouldn't mean we're going still to the upside. I want to see a close above this high here, and also a close above that fractal would be very big. Then I might start changing my mind. I might start changing my bias and feel like the market is going to go to the upside, and also that would be confirming the 1 2 3 pattern. All right. So the next thing that I am looking at here, right? Hold on for 1 second. The next thing that I'm looking at here is maybe this bounce here. But since this is the 240 time frame, I like to pay attention more to the daily time frame and get the bias off of that. But the move starts with the lower time frame, and then it works its way up to the big time frame. But I still love the bias of the daily. The daily is the whole picture. So when you look at the daily, you get 24 hours of a candle, and that's the whole trading day for all sessions, okay, all of them put into one candle. But if you're just looking at a 4 hour, then you're catching a part of one session and maybe a part of another and a part of another. But you look at one 4 hour candle, right? How many 4 hour candles are in a daily candle? 6 candles, right? So you're getting 1/6 of the total information. So when you're getting excited when you see this breakthrough here, you're getting really excited because you see one candle break through, and then maybe another one that looks like it broke through. But when you go back to the daily and get the whole picture, and if you would have waited for that daily candle, you would have understood that, well, that's not a breakout yet. All right, and you would see the rejection. The selling pressure here is strong right now. All right, but that doesn't mean we still can't go to the upside, but you just got to go by the things that you see on the chart and what price is showing you pretty much. So I'll throw Ichimoku back on here so we could look at it on the 4 hour time frame, because basically Ichimoku is telling me it's telling me on that daily, it looks like, you know, yes, we're going to see more ranging. It also says that there's some resistance up here, and you got a lot of indecision. With that indecision, that's telling me ranging. You could see the thick cloud, but now we thinned out here. All right, so we probably got a turnover here, which means the cloud has changed to bearish because you got a bullish cloud here. So your future is bearish. You got a TK crossover that's bearish, but now they're together. But Chiku span is just still hanging in this price realm, so that means you're still bearish. All right, so based off of Ichimoku rules, we're bearish, and if I go to the 4 hour time frame, I've got a different signal. Now I'm bullish. Everything's bullish. TK crossover is bullish. My future is bright. Chiku spans, price is above the cloud, and Chiku span is above price right here. So everything's bullish on the 4 hour. How do I decipher that? Wow. Okay, a lot of times what I do, guys, I don't let that worry me, because first of all, I get my bias. This is what I do. All right, if I'm going to trade the daily time frame, I don't need to look at Ichimoku on 2 time frames, because really, if I say this is going to be a Kumo breakout to the upside on the daily time frame, I'll get rid of Ichimoku now because I have my bias. If I say I got a crossover, I got all bearish signals on Ichimoku on the daily time frame, then why do I need to put it on the 4-hour time frame and get different signals? Because I'm trading the daily signal. It's just like the 4-hour time frame. I'm trading a 4-hour time frame signal. So if you're trading MACD and it tells you something on daily time frame, then you go to the 4-hour time frame and you see something different. Does that eliminate what you see on the daily time frame? No, that's the daily signal. That's what you have. Does that eliminate what you see on the 4-hour time frame? It all depends what time frame you're willing to trade off of. So if I'm getting my bias from the daily, but the 4-hour is telling me different, well, then if you really don't feel safe, then I would just not even mess with the trade. All right, but for me, what I do, I take my bias off the daily time frame. And so when I'm looking at that daily, now when I go to the 4-hour, I already got my bias. So if I'm looking at Ichimoku, I got a mixed bias, which is telling me ranging. All right, so when I go to the 4-hour and I see a different thing, I really take this off before I go to the 4-hour because I don't need to be confused. So now I could go down to the 4-hour and then I could trade what I see here. So 4-hour told me, daily told me that the market was sideways pretty much. It was going to be a ranging market based off of Ichimoku. So with that, I'm going to say, well, we're going to stay inside this range, right? So maybe the market will not break through this level. So you could see we had a couple breakthroughs like that here. And now we got that here. So I'm going to wait because what I'm going to wait for now, price is finding support at this level right here, all right, where we have a fractal. So where you have support there, we need to see if that level is going to hold, because if that level holds, then we might see the market move to the upside. So I could pretty much box in this level and then wait for the market to trade above this level or trade below that level, and then I'll kind of know for sure what I might see the market do. Now there's no sure guarantee or bet on the market. So the market's going to do what it wants to do. You can only judge it by certain things. You got a lot of price action to help you out. You got some of your signals that you get from other indicators. You got divergence, you got fractals, you got a lot of things that can help you. But I don't suggest using a lot of things. I suggest that you have something that you really like and understand, you know, be it Ichimoku, be it support and resistance, or MACD, stochastics, whatever. All right. And then make sure you master that and trade that. All right. And then you just do what you do. Let the market do what it's going to do, and then you just follow the signals and you follow the price action. Let that lead you. So price is always king. People always look at Ichimoku, right? When you put Ichimoku on the chart and you see price dropping to the downside, but you still got bullish signals on the Ichimoku system. Well, price moves quicker than Ichimoku. Ichimoku's not going to move as fast as the price. So you want to really be listening to price before you listen to anything else, because that's what's going to lead you. I see a lot of people using strength indicators and all that stuff. Well, if you look at the chart, it'll tell you what's strong. It'll tell you which pair is strong just looking at the chart, okay? So that's the way I look at it and believe. I try to keep my trading as simple as possible, all right? So hopefully you could look at this. We'll come back and try to update this. We could try to get a trade in here with this pair, because let's go back to the daily. I'll tell you exactly what I'm thinking here. As I get out of here, we're going to look at this rejection and we're going to see if that holds. A lot of times the market's been gapping up. What's going to be good, the market gaps up a lot of times on the open, but most of the time, look at these gaps, guys. Look at a lot of the gaps that you see on the weekend. When the market gaps up Sunday, what does it usually do? It usually recovers the gap. So my thing is, I'd love to see this thing gap up, right? So if it gaps up, no matter how high, I don't want to gap past this level. But if it gaps up in here somewhere, I'm going to still look to trade it to the downside. So I'll put a pending order to the downside, let the market come in, trigger me, and take me to the downside. Now, if I just want to play it safe, I could put an entry order right here and wait for the market to come down, trigger me, and try to trade this back to the support level. So I'm going to trade the market like it's been doing previously. So I'm going to trade it back to this level. Now, no saying if we'll get there or not, but that's going to be my ultimate goal, to get to that point. So I'm going to look at getting an entry just below the rejection level. Just below that rejection, I'm going to like to put my stop loss above that rejection. Now this is daily time frame, so you're going to be a little bit big. So that's going to be my opening bias right now when the market opens up. So if the market opens up, let's say the market opens up, let me put a line here, an arrow here. We'll use this arrow. So let's say the market opens up right somewhere in there, right? So the market opens up there and you have an entry right here. All right. Well, what if the market opens up here, right? You can put a nice entry at the level right here, right at that 114,925 level, or is it 114,803? 114,803 level. And then if the market was opened up here, I'm still going to put an entry order here. I'm going to put it in the middle. And then I could keep my stop loss at this point, which is eliminating risk for me. All right, because down here my stop loss is bigger. As I see the market gap up, I'm looking for the market to fill back that gap and then trade me to the downside. So that's what I'll be looking for. So the open is going to be important. If it gaps to the downside, then I probably just leave everything go. I mean, because I'm not sure, but it could go to the downside and continue, and I'm not going to get the trade, so I have to wait for a pullback. All right, but other than that, guys, that's what I'm looking at. You could catch all this on my site, a lot of this, if you just come and look at some of my blog. I have some things on there that you could look at, and I'm going to be posting stuff in there most of the time. And if you want even more, we do webinars on a daily basis almost sometime. It all depends what we're doing that day. We try to do daily webinars, and we do weekly webinars. And we talk about the whole market. We talk about every pair that we're looking at. All right, so sometime we're going through 12, 15, 20 pairs talking about the market on a daily basis. All right, and talking about what trade setups we see. So if you want to get some of that information and you want to be in my chat room and members forum and trade updates and stuff like that, think about becoming a member at my site, fx@oneglance.com. All right, guys. Until next time, hope you enjoy this, and hopefully it works out and I won't suck anymore. All right, thank you guys. God bless. Have a great one. So long.